Welcome back, my friends. The news today is that NFL expected to vote in favor of private equity ownership. Select firms to commit $12 billion. NFL owners are expected to vote on Tuesday to allow select private equity firms to invest at up to 10% of a team stake. The initial firms will include Ares Management, Sixth Street Partners, and Arctos Partners, Dynasty Equity, Blackstone, Carlyle Group and CVC Capital Partners. People familiar with the matter told CNBC. The NFL is the last major sports league to allow private equity investment as rising valuations make it harder for owners to buy in. But, before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And, please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. The NFL's most exclusive club is about to let in new members. At a special league meeting in Eagan, Minnesota, on Tuesday, the National Football League's 32 owners are expected to vote in favor of allowing select private equity firms to buy up to a 10% stake of a team. Each fund or consortium will be able to do deals with up to 6 teams. The initial approved firms will include Ares Management, Sixth Street Partners, and Arctos Partners, in addition to a consortium nicknamed the Avengers that includes Dynasty Equity, Blackstone, Carlyle Group and CVC Capital Partners. People familiar with the matter told CNBC. The firms collectively have $2 trillion in assets and intend to commit $12 billion of capital to be raised, inclusive of leverage, over time, said the People, who asked not to be identified to speak about terms that were not yet public. With at least 4 investor groups able to invest in up to 6 teams each, that works out to $500 million of added capital on average for each team that receives an investment. NFL Commissioner Roger Goodell told CNBC in July that the league has had tremendous interest from private equity. The league created a committee last September to look at the possibility of welcoming private equity funding and has been meeting with the selected firms more recently. The NFL is the last major sports league to allow private equity investment, and it's still treading lightly on the issue by allowing only a select group to participate and at a lower rate than the other professional sports leagues. The National Basketball Association, Major League Baseball, the National Hockey League and Major League Soccer all allow private equity ownership of up to 30%. Goodell told CNBC in July that he believes the 10% is a complement to the existing ownership structure and that the percentage could be raised at some point in the future. As NFL team valuations rise, it's meant a smaller pool of owners have the money to foot the price tag when teams become available. That dynamic was on display during the sale of the Washington Commanders last year. The franchise sold for a record $6.05 billion to an ownership group that included Apollo co-founder Josh Harris and 20 other investors. Harris said in June that the process created a little bit of a wake-up call at the NFL. Unless you're one of the wealthiest 50 people in the world, writing a $5 billion equity check is pretty hard for anyone, Harris told CNBC at the CNBC CEO Council Summit at the time. As the NFL opens its doors to fresh capital, the money will also free up funding for new stadiums and related projects. The Buffalo Bills and Tennessee Titans are both currently in the process of building new stadiums, while the Cleveland Browns, Chicago Bears and Washington Commanders are actively pursuing new stadiums in the future. Allowing private equity investment in NFL teams introduces several potential risks. Short-term focus. Private equity firms often seek quick returns on their investments, which might lead to decisions that prioritize short-term gains over the long-term health and stability of the team. Increased debt. Private equity investments can sometimes involve leveraging significant amounts of debt. This could put financial strain on the team, especially if the expected returns do not materialize. Loss of control. Traditional team owners might lose some control over team operations and decision-making processes, as private equity investors typically seek a say in how their investments are managed. Cultural misalignment. The goals and values of private equity firms may not always align with those of the team, its fans, and the broader community, potentially leading to conflicts and dissatisfaction. Market volatility. The involvement of private equity could introduce more volatility into the sports market, as these firms might buy and sell stakes in teams more frequently, leading to instability. Regulatory and compliance issues. Increased scrutiny and regulatory requirements could arise, as private equity firms are subject to different regulations compared to traditional team owners. These risks need to be carefully managed to ensure that the introduction of private equity into NFL ownership benefits the league, the teams, and their fans. What are your thoughts on this change? Other major sports leagues have gradually opened up to private equity investments, each with its own set of rules and limitations. NBA, National Basketball Association. The NBA allows private equity firms to own up to 30% of a team, with no single fund holding more than 20%. This policy has enabled firms like Arctos Sports Partners to invest in multiple teams. MLB, Major League Baseball. MLB changed its rules in 2019 to permit private equity and institutional investors to take stakes in multiple teams. This move was aimed at increasing the financial flexibility of team owners. NHL, National Hockey League. The NHL also allows private equity investments, but like the NBA and MLB, these are typically limited to minority stakes. MLS, Major League Soccer. MLS has followed a similar path, allowing private equity firms to invest in teams while ensuring that these investments do not lead to a loss of control for the original owners. European soccer. In European soccer, private equity investments are more common and often have fewer restrictions. For example, the Premier League allows significant private equity involvement, although it still requires league approval for any major ownership changes. These leagues have implemented these policies to attract new capital while maintaining stability and control over team operations. Here are some notable examples of private equity firms investing in sports teams. Arctos Sports Partners. This firm has invested in several high-profile teams, including the Golden State Warriors, NBA, Houston Astros, MLB, LA Dodgers, MLB, and Utah Jazz, NBA. Red Bird Capital Partners, known for its investments in AC Milan, Serie A, Fenway Sports Group, which owns the Boston Red Sox and Liverpool FC, and the Alpine Formula One team. Dial Capital Partners. This firm has established funds to buy minority shares in various sports teams, attracted by the increasing value of media rights and global expansion. Sixth Street, another major player. Sixth Street has invested in teams like the San Antonio Spurs, NBA, and Real Madrid, La Liga. MSP Sports Capital. They have stakes in McLaren Racing, Formula One, and other sports entities. 777 Partners. This firm has invested in several soccer clubs, including Sevilla FC, La Liga, Genoa FC, Serie A, and Red Star FC, French League 2. These investments highlight the growing interest of private equity in the sports sector, driven by the reliable value and potential returns associated with sports franchises. And yes, there have been some notable examples of failed or controversial private equity investments in sports. Manchester City, Silver Lake. In 2020, Manchester City, backed by Silver Lake, faced a €10 million fine and a 2-year ban from European club competitions. This was due to accusations of masking equity funds as sponsorship revenue. AC Milan, Elliott Management. Elliott Management took control of AC Milan in 2018 after the previous owner defaulted on a loan. While the club has seen some success, the takeover was controversial due to the financial instability and management issues that led to the change in ownership. European football clubs during COVID-19. Many European football clubs, already struggling financially, became distressed during the COVID-19 pandemic. This forced them to seek private capital, leading to controversial takeovers and financial restructuring. These examples highlight the potential pitfalls of private equity investments in sports, including financial mismanagement, regulatory issues, and conflicts of interest. Do you think these risks outweigh the potential benefits for sports teams? But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And, before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school. As well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.